Whoa, you won't believe what Donald Trump just said about Jerome Powell at the Federal Reserve. Let's analyze exactly what's going on, what it means for a potential market correction. Also, keep in mind that if you want to invest in my real estate startup coming out at a 1-to-1 valuation, that's a steal of a deal. You could do so, but potentially only as a course member. We're opening up investments to course members first and potentially only if we max out. So make sure you're a course member before that coupon expires this Friday.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
I would bet that over the next year, leading into the 2024 election, one of the biggest topics that will be argued about by politicians running for office will be the fate of the Federal Reserve. Donald Trump just had a few choice words to say about Jay Powell, and we're going to review exactly those. We'll also review what I predicted Donald Trump would say just about a week ago. But first, it's worth remembering that criticizing Jerome Powell has not always been popular. In fact, very few criticized Jerome Powell during the pandemic, when the money printer was flowing and everybody was making money. However, Republicans were initially first to start criticizing Powell for being too slow to respond to inflation. And they were right. Jerome Powell and the Fed were way too slow. They were still printing over $80 billion per month when we had over 6% inflation because they believed that inflation would be transitory. Now, maybe inflation would have been transitory if we were only facing one wave of COVID and then we were done. But we didn't have one wave of COVID. We had a wave of COVID, followed by a wave of Delta, followed by a wave of Omicron, and then war, which led to a massive oil price shock and massive sustained inflation, thanks to these over and over again repeated shocks breaking down supply chains, leading actually to deglobalization, which is very inflationary, and ultimately leading to a Federal Reserve that just missed the boat. They printed money, and too much money, for too long. Let's not even get started by talking about the fraud that happened during COVID. Let's just focus on what politically happened for a moment before COVID. See, during COVID, we know that Republicans were first to criticize Jerome Powell, but they were also critical of Jerome Powell before COVID. Remember that when rates were actually rising in 2008, Donald Trump said he would consider firing Jerome Powell because it didn't make sense that Jerome Powell was raising interest rates when in the mind of Donald Trump, the economy was fine. And there was a belief that potentially the economy might actually overheat. The yield curve inverted before COVID. It's inverted again now, which is potentially a way of saying, okay, maybe we need to slow the economy down and try to orchestrate a soft landing, which is much of what the Fed's trying to do now as well. But inflation was actually running under target in 2018 and previously, leading a lot of people to wonder why? What was the point of slowing down the money printing if inflation was actually fine? So you kind of have a little bit of a flip-flop, right? Because in 2018-19, you had Republicans and Donald Trump like, hey, keep printing. Like, why are you taking the punch bowl away? And then in COVID, it's like, hey, all right, we printed too much now. Okay, now we printed too much. Let's take the punch bowl away. And what's fascinating is the only ones to really criticize Powell now that the punch bowl is being taken away so far have been Democratic lawmakers like Elizabeth Warren, arguing that, well, hold on a second. If you're raising rates this much, you're going to overdo it. And now you're going to cause a recession and you're going to lead to more joblessness. In fact, Elizabeth Warren says, hey, Jerome Powell, isn't it true that if the unemployment rate goes up 1%, it's likely to actually go up 2 or more percent? Isn't that historically true? To which Jerome Powell actually said, yeah, that is historically true. Not only is that historically true, but the Fed's kind of planning for unemployment to rise another 1%. This is leading to a lot of nervousness. And so that's where we go right back to now and what we expect going forward with politics in the Federal Reserve. Because right now, it feels like the Federal Reserve is crushing the economy a little too much. Markets are selling off because they believe the Federal Reserve is blind to essentially inflation being gone. The markets hear that the economy may not actually be trending into a recession. In fact, the Fed at the end of July said maybe we're not trending towards a recession. JP Morgan came out about a week later saying maybe there won't be a recession. And since then, the stock market has essentially been straight down. Part of the reason for that is because the stock market's like, okay, well, if there's not going to be a recession, then there's no reason for Jerome Powell and the Fed to cut interest rates. So we're screwed if we stay at these rates for longer. They're going to destroy the economy. And that's what led me to tweet just about a week ago the following. I expect Donald Trump will start promising 0% rates by January 2025 if he wins, even though ultimately it's up to the Federal Reserve, especially since under Joe Biden we'll probably start cutting just before the election. In other words, it would be popular if we're going to cut rates before the election for Donald Trump to start talking about demanding rates being cut sooner rather than later, so maybe he could argue taking some credit for it. Although Donald Trump's probably not wrong here. Donald Trump's actually probably right. We probably ought to cut rates. Even though people believe that inflation could reanimate with a strong economy and cutting rates, there is possibly a greater risk of going too far and breaking something that will not easily be able to be undone, much like in China. There is a fear that China has gone so deep into deflation where people just don't spend money, that even if they do decide to cut rates, which they recently did, and they print even more money, which they haven't quite done yet, but they're ramping up to this potential idea, that it won't have any effect because they'll have killed the economy so much it would be like poking a dead horse with a stick going, come on, horse, get up. It's too late. You killed the economy. That's what China did. Evergrande just went bankrupt. That's not good. Now, listen to what Donald Trump just said today, a day where the stock market, well, let's just say, hasn't had a fantastic day, and the 10-year yield is skyrocketing because people are making a bet that Jerome Powell is actually telling the truth. They're going to keep rates higher for longer. They're going to destroy the economy. And so what does Donald Trump have to say about exactly that? Well, of course, Donald Trump is going to remind you to check out the coupon code expiring Friday. You could use that for both the Meet Kevin courses on building your wealth with lifetime access to the course member live streams for as long as those go on, and financial advice. We are actually now offering financial advice at StackHack if you'd like to learn more about the financial advice services we offer, whether it is a fundamental research, we'll throw in hours with our team doing fundamental research for you, or portfolio analysis, financial advice. Learn more at stackhack.com. Keep in mind that the real estate startup coming up, HouseHack, may only end up selling shares to course members, so you may as well take advantage of a great price now. Let's get started now with what Donald Trump says.
So you had exactly the reverse policies. No matter what he says, the facts show clearly that yours succeeded. You actually had it going year on year, 3-4% economic growth until the Federal Reserve started tightening interest rates in 2018 and 2019. I wanted to ask you about that because I know you were very cross at the Federal Reserve and very unhappy with Jay Powell. Now, Powell's been reappointed, as you well know. He's going to be there till 2026. So a second Trump administration, you have to put up with Jay Powell. What would you do about that? And would you think about reappointing him or speaking with him, or how would you handle that? Because interest rates can be important tools to stop inflation, but they can also destroy growth.
Yeah, I would not reappoint him. I thought he was always late, whether it was good or bad, but he was always late. I was surprised he was reappointed. Probably he got reappointed because they knew I didn't like him much. I felt that he was not good. In fact, I was very tough on him. And if I wasn't, I think we would have had much higher interest rates for much longer. And we had a boom, and it was primarily, in fact, one time, it looked like I was going to come down on him very hard. And he actually dropped them so much that it was like, he dropped them so much at one time. Remember? And people said, wow, what's wrong with the economy?
You gave him most improved player.
Yeah, but anyway, I'm not a fan of Jay Powell.
Okay, well, there you have it. So first of all, what is Donald Trump referring to when he says that Jerome Powell, in fact, at one point dropped them so much at one time? So that was COVID. That was when Jerome Powell dropped rates 2% on a Sunday. An emergency announcement, boom, we're dropping rates 2%. That was obviously an emergency situation. But whether it was because of the political pressure from Donald Trump or not, back in 2018, Jerome Powell did finally U-turn in December of 2018 and pause the rate hike cycle that he was on and then potentially suggest easing. Now, that was a big moment for stocks because if you go back to the pain that we experienced in December of 2018, which was about a 3-month period, you'll actually look back and see it was one heck of a time to buy. Now, that's no guarantee that now is a time to buy. Everybody's going to have their different opinions on where and exactly what you should be buying right now. And I'll give you my actionable opinions in just a moment. But take a look at this. This was 2018, and I covered the Fed then. You can actually go back in my channel and look at my Jerome Powell videos from 5 years ago because I covered every minute of this. And folks, as you can see, the market was on a beautiful uptrend, but diverted from this uptrend very harshly here in 2018, where you had this correction from about 187 to 139 on the NASDAQ. Well, just to put that into perspective, that is a 25.7% decline in the NASDAQ. That would be like if we go to present day today and say that we're revisiting a December of 2019. Let's go ahead and take our top here, our recent top, 387, let's call it 388. Let's go ahead and take off about 26%. So we're going to be down to 287 in that case. 287 would bring us back to this about 23% Fibonacci level. That would be quite a double dip. It might not be all the way back to the fears of the Paul Volcker times, but it would be quite the dip back down if we had a December of 2018 style correction. And this is where I believe that this is actually right now the moment that is most opportune for candidates like Donald Trump to start ramping up pressure on Jerome Powell. Mostly because I personally believe the Fed's already overdone it with interest rate hikes. I think inflation is solved. Every single day, I read earnings calls for companies. Just in the last 2 days, Target, Walmart, Home Depot, what are they all saying? No more inflation. Supply chain solved. No need to raise wages anymore. Every single one of them are saying the same thing. Yet here we have a Fed that's like, oh, well, may have to raise rates even more. I think this is going to turn into a massive political discussion. The amount of political pressure that ramps up against the Fed will exponentially increase the more, A, we get closer to the election, and B, the stock market potentially sells down. Now, it doesn't look like we're anywhere near a recession now. The inverted yield curve suggests that we're going to be heading into a recession, although they are steepening. They're steepening back to banking crisis days in March of 2023 here. That's as steep as we are again on the yield curve. We're still negative by about 60 basis points, but the point is we're steepening. And when you steepen, you tend to experience pain, which here we are. We're experiencing pain. This is part of the volatility that we were expecting in 2023. We just haven't actually had much of that volatility. So anyway, I wouldn't be surprised if we actually return back to this greater trend line that I have right here. You can see this trend line I have drawn here. If I somewhat extend that, we'll grab the correct line here. If I somewhat extend that trend line that I have drawn, it wouldn't surprise me to end back up at about a 348 NASDAQ, which means, honestly, we probably still have Jackson Hole to get through here. Jackson Hole style sell-off. Maybe Jackson Hole is the opportunity for Jay Powell to turn this around. But if Jackson Hole next week goes bad, and we actually get more of this hawking from the Fed, when inflation is already proving to trend down, the market has more pain ahead of it. Not just another 3 percentage points on the NASDAQ, but even more. But again, the political conversation around Jay Powell and his efforts will be ramping up because Donald Trump is hitting a nerve when he says that Jay Powell is always late. So far, Donald Trump is not wrong. What do you think? Either way, let me know in the comments down below. Check out the courses on Building Your Wealth link down below. Use that coupon code before tomorrow. Remember, that'll give you first access to investing in House Hack and potentially the only access to investing in House Hack when you are a course member. Thanks so much. Check out the courses, link down below. We'll see you soon.
Congratulations, man. You have done so much. People love you. People look up to you.
I took my enthusiasm for the market and money and started learning everything I could about real estate.
I would be the most transparent governor that would exist. I became a licensed financial advisor.
Why not advertise these things that you told us here?
We'll try a little advertising and see how it goes.
Always great to have you on. Kevin Paffrath there, financial analyst and YouTuber Meet Kevin.